We've gone from a six-figure market cap to a six-figure price in 16 years, and it doesn't seem to be slowing down at all. No, I mean, it's not something to laugh about. You know, it's a warning shot over the bow. Like, if you're going to talk about monetary sovereignty, we're going to let you know that we have complete control over all your money. You need to sit down, shut up, and not talk about it. You know, and this is with like 25 visitors on a website talking about gold. You know, 6 months before Bitcoin even gets launched in 2009. And with the Trump administration, we seem to have this window open to push forward monetary sovereignty. And so we should seize it, you know, like Clarity Act, Genius Act, you know, protecting software developers. I've worked on some legislation that helps do that. The world we're living in now in 2025, I mean, that was very much sci-fi, you know, 15 years ago. Definitely have had a wild ride with our magic internet money.
Hi, Trace. Thank you so much for coming on the podcast.
Yeah, thanks for having me, Robin. Great to be here.
And you said before, what did you say? That you have a fossil? It's like an OG Bitcoiner?
Yeah, and somehow you dug up a fossil to come be on your podcast today. So, I mean, I started Bitcoin Knowledge Podcast. It actually came out of the Run to Gold podcast that I'd started in 2008. And, so I was doing Bitcoin podcasts as a host, like back in 2011, and then creating other content even a little earlier than that. So, definitely have had a wild ride with our magic internet money. So, you know, maybe there's some more stories you want to dig out or something. I don't know.
It's crazy for me because I needed over 3 years before first hearing about Bitcoin to actually like buying Bitcoin. And then I needed another almost 3 years and a bit, to actually start my own Bitcoin content creation stuff and having a podcast and all those things. So I feel like from first time hearing to podcast, it took me 6 years. So it was for you really quickly where you heard about it, you were convinced of it, and then you even made a podcast on that. How was that possible for you?
Oh, well, somebody had to blaze the trail and lead the way and teach you guys, right? The young Padawans. But no, I mean, as definitely one of the intellectual thought leaders around Bitcoin, and one of the, like my friend Adam Back, he says one of the clearest and most consistent monetary voices in the space. And so for me, I'd actually written a graduate level paper on money and currency back in the early 2000s. And then I'd been studying a lot of the Austrian School of Economics, you know, Mises, Rothbard, the gold bugs. That's why I had a Run to Gold blog. I launched that in January of 2008. I was the first to really talk about Bitcoin and gold and the relationship between the two. Actually, the first with a public platform to even talk about Bitcoin itself. Myself and Max Kaiser, you know, were the people with platforms back then. And Max and I, you know, we rubbed shoulders with goldmoney.com, an early digital gold currency that, was circulating around in the mid 2000s also. So, you know, it's like this sound money, monetary sovereignty, speech, you know, those are very important things to both Max and I. And, and we're both fossils in that regard.
How different? Because I think people don't realize how tragic, like how massive the difference is between Bitcoin in 2011, 2015, and to Bitcoin in 2025, which is 10 years is not that long of a time, but in Bitcoin, it's ages ago. It's a very long time. Maybe you can give a little bit of an overview of like how different it is from today's Bitcoin world to 2011, 12, 13, 15, when you kind of came in.
Yeah, I mean, like when I first started publicly talking about it, you know, it's sub $1 million market cap. Like it's a 6-figure market cap, right? I mean, now it's doing 20 billion of daily volume, you know, so it's like 20,000 times like just in volume than the market cap was. I mean, it's not even a comparable thing, you know. So we were definitely on the extreme frontier of pushing forward monetary sovereignty in the information age. I've used the analogy that if London is like gold, the old world, and Columbus, Satoshi discovered the trade winds to the new world that allowed it to be monetized. You look at the early settlers, the like William Bradford, with the Pilgrims in 1620 landing in Plymouth Colony. That's kind of the generation that I'm in with Bitcoin, right? And Bitcoin's kind of like Manhattan, which is, Manhattan, because of how the map was set up, like as we developed the Western continent, as we developed, North America, all the commerce flowed through Manhattan. And that's why Manhattan became this like great city in the world. And Bitcoin's like that, all the altcoin stuff, like it's all flown through Bitcoin. But we have other cities on the continent, and we have we have a map on the continent. So, like Chicago's like Ethereum, or maybe St. Louis is like Monero, the Wild West. We probably still haven't found San Francisco. Keep in mind, like in 1860, when gold was discovered in San Francisco, there were 800 people in San Francisco. Like we'd been on this continent for a couple hundred years, and San Francisco was still 800 people. And now San Francisco is one of the great cities of the world, built entirely on speculation, gold fever. And so, I've been just very curious with, starting as a gold bug, because Bitcoin didn't even exist. We at Gold Money, as a large investor in Gold Money, we had 5 patents that were granted in the 1990s for digital gold currency. And so, we were innovating sound money in the digital age. Like, in the 1990s, you got Gold Money and eGold. I played different online MUDs and games. I helped fund Kraken, led the Series A in Kraken with Hummingbird, co-led it. And Jesse Powell, he got his start with loot.com, which was basically selling World of Warcraft gold. So a lot of us, we were playing in these like virtual worlds with virtual currency. And then some of us, this rare little sub niche of gold bugs, we were experimenting with trying to bring sound money onto the internet, something limited in amount or scarce. And then Satoshi, makes the breakthrough with the difficulty adjustment algorithm and digital scarcity that enables Bitcoin. But there was a whole bunch of like just technology that went before that. You had asymmetric encryption, public-private key encryption. You had Adam Back's hash cache and proof of work. So these pieces all had to be put together over decades, of experimentation and stuff like that. So Bitcoin didn't just happen. And those of us that, were around Bitcoin or saw Bitcoin and understood it or things like that, kind of to your journey with it, it took a lot of like work, right? To prepare the mind to receive something like that and be able to connect dots and understand it. And then we're fighting against, actually trying to carve out the monetary sovereignty territory in the legal regime. Because like eGold, the guy who founded eGold, he ended up with an ankle bracelet, because of money transmission issues. Gold Money was legally compliant with everything, but it was still very much a gray area, and it wasn't profitable really to have the digital gold currency component. Like nobody really used that. They just used the storage. So eventually they kind of got rid of that whole part of the business, the currency part of the business, and they just vaulted the gold for people and charged, the storage fees and insurance fees. But this just spoke to how difficult it was to innovate in terms of monetary sovereignty, because at the end of the day, Bitcoin or gold or dollars or euros, they're just a product like Coke or Pepsi. We use them as a monetary product, but they're just a product, and we hire them to do a job. And but there's so much regulation around banking and money transmission and all this stuff that it really trammeled. And there's a lot of this monetary repression. So while we had so much advancement with the internet in general, we didn't get very much advancement in terms of like the money and the currency, much less like the sound money, right? And so we've had this rise of the fiat currencies over the last 40 years since Bretton Woods convertibility of the dollar to gold was closed by Nixon.
Yeah, it's interesting. When you think about Bitcoin as a product, it's the only product without a product team, without a marketing team.
No, we go anything out there is kind of a product. HTTP is a product. TCP/IP, SMTP. Then we got a bunch of open source software out there, like GitHub. I mean, it's now been acquired by Microsoft, but is a product. Linux is a product. Like why do we get the thing, and why do we hire it to do? Like, what do we want it to do? This is like thinking from Clayton Christensen at a Harvard Business School, on like, why do we hire products? Like, what job are they doing? So I think it's helpful to look at all this stuff through that lens, because when you're in this environment of, rapid technological advancement with, Intel and microprocessors and personal computers and iPhones. I mean, like the first iPhone was launched just a couple years before Bitcoin. So this idea that you're even going to be able to be like remote and sending around like digital currency, like from the palm of your hand, and like, the world we're living in now in 2025, I mean, that was very much sci-fi, 15 years ago and 20 years ago. But people with foresight and then research and understanding of all these different like domains of knowledge, whether it's thermodynamics, which has to do with like mining and Bitcoin, or internet protocols, because it's a peer-to-peer network, or cryptography and math proofs and stuff like that, and different premises that we're using in order to like figure out what the actual security guarantees are that are underlying the math. These are all huge branches and domains of knowledge that then had to be put together. Game theory, Austrian School of Economics. I mean, back then, nobody's really talking about like inflation and central banking and all that disaster, right? I mean, I started talking about a bunch of that stuff. I really helped start pushing all of that forward when I was talking about Bitcoin. I mean, because the gold bugs would talk about it, but it didn't really get outside of their niche. But as soon as like Bitcoin starts going up in price, that ethos, or that core of the Austrian economics that undergirds a bunch of our thinking around digital scarcity and stock to flow. I mean, 2015, I mentioned stock to flow on Twitter in the context of Bitcoin. Like, that's the first mention of it. Like on Twitter, came from me, right? So, I mean, somebody had to do the research and understand and put the dots together, and then they had to be willing to kind of get up on the pole and talk about it. Because, look at what happened to Julian Assange with WikiLeaks, or like, other people that talk about stuff. Like it's a thankless job, right?
Did you have the fear that something happens to you, like from a legal perspective?
Well, there's legal, and then there's like just deep state shenanigans, right? And I mean, with my Run to Gold blog, I started talking about like the sound money stuff, and all of a sudden, I mean, this is 6 months into it, I have like 25 visitors a day to my website. Like, nobody's reading my website. It's tiny. And I have a charge on my credit card for $3.47, like a small de minimis amount from government services, quote unquote. I don't recognize it. I call up the credit card company and I'm like, hey, I don't recognize this. They're like, oh, okay. I was like, well, can you take it off? Like, I think it's fraud. They're like, well, have you contacted the merchant? I'm like, I don't know who the merchant is. Like, I looked on your website, you don't have any contact information for the merchant. Like, no, I haven't contacted the merchant. They're like, well, we can't take it off unless you contact the merchant. And I was like, well, can you give me the merchant's contact information then? They said, no. And I was like, well, I think it's fraud. Can you take it off? And they said, no. Click. No, I mean, it's not something to laugh about. It's a warning shot over the bow. Like, if you're going to talk about monetary sovereignty, we're going to let you know that we have complete control over all your money. You need to sit down, shut up, and not talk about it. And this is with like 25 visitors on a website talking about gold. Like, seriously? 6 months before like Bitcoin even gets launched in 2009. And one of my friends, Bill Murphy, so Chris Powell and Bill Murphy, they founded GATA, the Gold Antitrust Action Committee. And the whole reason like I was a GATA consultant, got involved with GATA probably like 2005, because as soon as you hone in on sound money, eventually you're going to hone in on GATA's beacon of what they've been doing with the sound money. And so, I'm learning from Bill and Chris all about this stuff. And Bill tells me about when he and Chris first started GATA back in 1997. And he went on, I think it's CNBC or something, and talked about this gold price suppression scheme. I mean, one was that he was never invited back to any financial television. So they're not going to give any platform to let, the ideas get out. But two, and Bill's a pretty big guy. He had played professional football. He was jogging in the park and he got jumped by some goons, and they were like, you need to not talk about this stuff at all. And then they got like a sock with rolls of coins in it and they broke his jaw. So I mean, middle of 2008, I'm at the GATA conference and I have breakfast with Dr. Edwin Vieira, who wrote Pieces of Eight, and my intellectual mentor. And Pieces of Eight is phenomenal. It's like 1,800 pages, like great content in there. Legal treatise on American law as American monetary law. And so I go to his presentation at GATA there in DC in 2008, and someone asked in the question and answer, like, man, you painted a really like stark, dark picture of what's happening in terms of the money. And he's like, yeah, I know. And the guy was like, I mean, what can we even do about it? And he was like, well, I talk about it because that's what I can do about it. And I don't want to live in 1956 Czechoslovakia with a boot on my neck. And so, this issue of monetary sovereignty is, for me, it's a very like potent one. And especially as we see CBDCs getting rolled out worldwide, we see stablecoins gaining more traction. We see, this is all stuff that infringes on our monetary sovereignty. And so it's part of the reason why, I think Treasury Secretary Bessent said that Bitcoin is one of the most important phenomenons happening in the globe right now. Like, I think this is like a lot of the reason, and with the Trump administration, we seem to have this window open to push forward monetary sovereignty. And so we should seize it, like Clarity Act, Genius Act, protecting software developers. I've worked on some legislation that helps do that, and state level legislation. But yeah, this federal legislation is going to be helpful. But we have a window of opportunity, and we should do what we can to seize as much monetary sovereignty territory as possible, in my opinion, because that window may not be there. And we saw how atrocious the Biden administration was in going after this industry and trying to close that window. I mean, I was targeted by the Biden administration. So, like a lot of other people in the space. And fortunately, I didn't have any issues that they could hang anything on. But it's a real like full contact sport that we're playing. Like, we're not just chasing like dog coins going up in price, like this is a critical thing for the planet.
I do think so too. Do you see stable coins just as CBDCs? Is that kind of almost the same thing?
I think a lot of it lies in the implementation. Could they be kind of a backdoor for CBDCs? I mean, anytime you really, and Ross Ulbricht talked about this at the Bitcoin conference, like we're either moving decentralization forward or we're like centralizing things. And I suppose that like if we can have this sort of a free market money like we did in the 1830s and 1840s, where like everybody and their dog issued like a banknote. I mean, we had like 50,000 different banknotes circulating in the United States that were redeemable for specie, for gold and silver. And then gold and silver was what could actually be the legal tender. Article 1, Section 10, Clause 1, which is still the law of the land, just not obeyed by all three branches of government. And so what do you do about that? but it's, yeah, I mean, if we can kind of return to this free market money, I mean, I think it'd be better to have like, Walmart and Amazon gift cards being money as opposed to like only the dollar, because at least you can choose between Amazon and Walmart, like choose like more than one, and hopefully there's a little bit of decentralization there. Let me rephrase it. At least like we're moving on the spectrum more towards decentralization than centralization. But if we're still in this like oligopic system where it's controlled by some of these big oligopic publicly traded companies, we saw what they did under the Biden regime when it came to censorship and just towing the party line, and Operation Choke Point 2.0 and denying bank accounts. And so, I mean, in some ways you might actually get the worst of both worlds if we have like privatized, centralized money and it's not really like a free market money. If we can get a free market money, I mean, that would be phenomenal. And if we could have stablecoins that were much more kind of like this free market money, I think the stablecoins just show how strong the dollar actually is. And when you look at it from a game theory perspective, there's a lot of incentive for the United States government to kind of continue allowing the dollar to perpetuate its reign, but then to encourage, say Bitcoin and gold behind it. That way, the euro or the yen, at the best, they could just be fourth. Like box them out. Like you have the best fiat currency instrument and then box out any potential competitors with the best sound money instruments also.
It's super interesting because you have the context of being over a decade into Bitcoin. And I was really fascinated going from a 6-digit market cap to now we have a 6-digit Bitcoin price per Bitcoin unit. This is kind of unreal to think about that development and see like what happened in between. And also unreal that, as you mentioned, that the president of the United States is going to Bitcoin conferences and talking about Bitcoin and have fun with your Bitcoin and all those kind of things that come from a president.
Yeah. And has a publicly traded company that owns $2 billion worth of it. I mean, like, it's not going away. I think we can all agree Bitcoin's not going away. It's here to stay. It's changed the planet permanently with digital scarcity, and it's still a question mark. What's going to be the world reserve currency? The next one. Is it going to be gold? Is it going to be dollars? Is it going to be Bitcoin? Is it going to be kind of a combination of all as we go through a transitionary period? All of this, there's geostrategic ramifications and geopolitical ramifications. I mean, I did an interview with Max Kaiser like 2014 talking about how, some little country is going to pick up Bitcoin and use it as like a political shield or bludgeon. And look at El Salvador. They've done exactly that. And now the U.S. is getting into the game, saying they want to have a strategic Bitcoin reserve. So, I mean, yeah, we've gone from a six-figure market cap to a six-figure price in 16 years, and it doesn't seem to be slowing down at all. Bitcoin treasury companies, this financialization network effect is really accelerating, which is exciting.
Yeah, this was kind of I was going towards, because seeing it the last decade and now seeing how this whole thing is accelerating and so many new players are coming in, and I mean this whole Bitcoin treasury companies and institutionalization and financialization of Bitcoin. This just for me, it seems like it's just getting started. There's a lot of capital that isn't even aware of Bitcoin or is just getting started to see Bitcoin as a potential player, or not even possible to allocate.
Yeah, and you look at like Patrick Byrne's work and what happened with Overstock and like short selling of company shares. Now they use that to control companies, and you have like the Dole Foods case where you don't even know who owned the shares or who had voting rights. We're supposed to have like, the thinking is that these companies are supposed to be like governed by the shareholders, and yet they get used as instruments like Twitter was to just kind of be taken over. And and a lot of it's because of how our monetary and financial system works and how the short selling rules and the like Section 8 of the UCC and a lot of these other things have kind of all grown in order to allow this like centralization and this like overweighted influence by the BlackRocks of the world or stuff like that, right? And now that we have this new technology, triple entry bookkeeping, like in Utah, they passed a limited liability DAO statute, so it creates an entirely new legal structure. Like you have C corps and LLCs, you have LLDs. So the way that we accumulate and organize capital, we had double entry bookkeeping. It changed stuff big time in the 1300s to present. Triple entry bookkeeping is going to do the same thing, and I think like holders of their capital, if they want to exercise their monetary sovereignty, they're going to have better tools to do that with at a much lower cost, and that's going to like start changing stuff in a big way. And I think like the Bitcoin Treasury companies, I think they're just getting started in this process. But they could really start vaporizing their shorts. If they're short interest in a stock, and you've got MNAV or something, if it gets too low, you could always like turn around and trade some of the asset, for your shares and vaporize those shorts and cause short squeeze and gamma risk acceleration for them and all types of stuff. So, I mean, I think it's very exciting, like seeing the Bitcoin Treasury companies getting integrated into the financial system. It's kind of inevitable. It's dual-edged sword, because they're going to have to play nice with the regulators. So, some of the there's some aspects of trade-offs that they're going to have to make, but that's just part of the game. And, that's why it's fun to explore a whole continent, right? And see what, innovate. That's what's, the innovators are the ones who have always changed. The innovators and the entrepreneurs have always been the ones that have driven forward humanity. Look at the Wright brothers, look at Elon, rockets and all types of stuff. Like, they shake things up. They change stuff. Satoshi.
The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilante represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just just one washer, all 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. Do you think because I see some people that say like, oh, why would I own Bitcoin if I can just own like an IOU of Bitcoin, like Strategy or a Treasury company that outperforms Bitcoin? And when we then talk about monetary sovereignty and proof of keys and all those things and running their own full node, do you think those slight trends towards, oh, I just care about like getting wealthy in US dollar terms are kind of tearing the focus away from the freedom of Bitcoin, the thing that they're like, oh, you can hold your own Bitcoin, you can be the master of your own keys?
Yeah, I mean, it really gets to the point, like, what are these guys doing? Like these treasury companies, like, what's your game plan? It gets back to like the product, like they're selling shares, right? Or other financialized instruments like Strategy, selling the different classes of shares and all this stuff. I mean, those are products, and it's like, well, what's the product that they're actually selling? If they're just going to be like a pass-through ETF where they want to be able to centralize a bunch of Bitcoin in order to save their company, but they don't really have any way to monetize it, and okay, like, yeah, I don't think they should trade very well. But if you look at like Strive, they want to kind of be focus very much on fundamentals, kind of like a Warren Buffett-esque type investment strategy where they can have cash flowing businesses or like other stuff or ways to mobilize and monetize the Bitcoin. Like Marathon's been trying to do some of that. They made investment. Well, they allocated some capital to 2Prime to manage it, like have kind of manage a derivative strategy. So there might be stuff like that to do. Maybe there's like overnight repo, or there's a covered call strategy, or maybe they could figure out a put strategy. It's a bad idea to like hold Bitcoin and sell puts on Bitcoin. I don't think that works, but you could really chop your own legs off that way. But there's a lot of creativity, and there's something, these treasury companies, they can do stuff that like a regular ordinary investor can't really do. Like they can be an ECP, for example. Like, do you know what an ECP is?
Not at all.
An ECP is an eligible contract participant. So they basically have to have a minimum of $10 million of liquid assets, but then they can engage in, different types of like swaps or other derivative instruments. And so, a treasury company could be an ECP, and they could have a treasury strategy that's using these more kind of advanced financial instruments to monetize and generate yield off of their Bitcoin. That nuclear reactor, as Michael Seyr says, that a regular kind of average investor couldn't really do. So, okay, now there's a reason to like hire the management team at the treasury company to manage a Bitcoin treasury, because they might be able to do something that you can't or don't really want to do, specializational labor, to generate a little bit of yield off their Bitcoin. Because as we do move, all of these, like all the trading shops we interact with, they're all like, Bitcoin vol's coming down. Saylor's even talked about it. It's currently like 26, and gold vol is like 15 to 18. So we don't have a lot more vol left to like squeeze out of Bitcoin. And Wall Street's coming in a big way, but they can make a lot of their different strategies work, like structured product strategies work with these lower vols. So that'll further bring out like the Bitcoin vol with these structured products, and Bitcoin will become much more of a store of value that way. So it'll, be able to act as like this pristine collateral. But it's not going to move around very much, because it's going to become so much more massive in its economic substance and size, so that vol will keep coming down, especially with these structured products. It'll become a better form of collateral. But what are you going to hire it for? it's kind of the question I think a lot of people are asking themselves, like, why do I hire Bitcoin? And you got kind of the anarcho-libertarian, like, monetary sovereignty branch, and they're like, well, all these Sucoiners are coming in here and they're putting it on their Treasury balance sheet, and like, I don't like how they're using it, and and then you're getting the opposite from the Treasury company people. But this is all part of it becoming a much more standard form of money and a much deeper capital pool of money, sort of like gold is, right? But it's not. When the vols come down like this, it's no longer, the product for the number go up crowd, because it's not going to go like, the vol markets are definitely saying that, like, it's not going to go to $500,000 by the end of the year. Where it used to have moves like that. It used to have huge implied vol premiums and realized vol premium moves. But now the market's like, no, that's not happening.
Just to make sure, with vol, you mean volatility?
Yeah, volatility, like realized volatility and implied volatility. So implied volatility is like the price of your options. So your call options and your put options. So when you look at, like, when people are selling, like, call option, like December 31st call options on Bitcoin for $500,000, like, the probability of that getting in the money is extremely low. And when you're dealing with stuff, there pretty much are only 5, like, people that matter when it comes to price. You've got willing sellers. Well, you've got sellers, then you've got willing sellers. So that'd be someone selling a covered call. Then you got holders. So someone who actually has the asset, but they're holding it, not doing anything one way or the other. Then you got willing buyers. So those would be put sellers. And then you got sellers. And then maybe you got, like, forced sellers, someone who's having to settle, like, cover a short, right? Or cover a long, they get margin called one way or the other. So, those are your 7 different groups, like forced buyers or sellers, willing buyers or sellers, and then hodlers. Those are the only people that matter when it comes to determining the price. You can chirp all you want on Twitter, like, go put a trade in the market. Like, that's what actually, like, starts dictating price, right? And the vol markets, are getting much more built out. They're much larger. There's hundreds of millions of dollars flowing around in them. So it's becoming a real, like, financialized product. And those vol prices are, like, giving us very good insight into what the market thinks about Bitcoin's future price.
Yeah, because this was actually my next question, where you saw now over a decade of development on Bitcoin, and we just talked about how crazy it was from, like, 6-digit market cap to 6-digit price. How do you foresee the future? And I'm not even only talking about the price, but just the developments that you kind of expect in Bitcoin, because we already have the president of the United States in Bitcoin. We have big companies in Bitcoin. Is it just more of the same, or, like, where's Bitcoin going in the next, like, 10, 20 years?
Yeah, I mean, that's a big question, right? Like, you've got people that want to push forward monetary innovation and monetary sovereignty, and Bitcoin's extensible. So that means that looks like, soft forks or potentially hard forks, or, building on top of the protocol itself with the tech that's around, build tech around it, like Lightning Network or something. And then you've got other people that, they're hiring Bitcoin not because they want any of that. They want something that isn't going to change. Sort of like gold. Like, gold's not extensible. Gold's the same thing it was 2,000 years ago. Like, gold doesn't change. And Michael Saylor has actually made comments about that. Like, these Bitcoin core developers and developers around Bitcoin are actually a liability, because we don't know what they're going to do or want to do, right? And they could change the thing that we bought as, like, the store of value. So, Michael Saylor is more kind of on this ossification end of the spectrum versus the innovation end of the spectrum. And I think as Bitcoin gets bigger and larger and more vested interests and more people that own it, like, it's going to naturally ossify. Like, it's just going to be harder to gain consensus among so many different distributed, decentralized, like, market participants.
Which makes about a few interesting because I think there are changes that we probably need to do on Bitcoin at some point with quantum and all those things where we probably need to do something. And there might be interesting conversations because different people want different implementations, which is like, oh yeah, do we get another block size debate? Do we get another internal civil war in Bitcoin?
I mean, there's already been talk like, oh, does Bitcoin need a tail emission because of fees or, quantum, oh, we can just upgrade the algorithms, like the crypto algorithms. It's like, I mean, there might be a very concerted effort on the other side to like prevent that from happening by people who don't necessarily have like large holders of Bitcoin's best interests at heart, right? Like, I mean, there's that's what you get when you're dealing with an open source project. Like anybody can participate.
Yeah, and the debates will be really fun. I think the next 10 years will be very fun to observe and very interesting to observe. That's what I'm fairly certain about.
Well, that's one thing. Bitcoin has always been a phenomenal entertainment product. There's so much entertainment to be had with our favorite orange coin.
That's why it's great to have a Bitcoin podcast.
Yeah, and you talk about the more controversial things, you'll get more page views. So, the game theory works all different types of ways, right?
That's very true. A lot of people also kind of like or dislike the political impact on Bitcoin, or the Bitcoin having an impact in the political sphere. How do you look at that now the suit coiners or the political forces are now in Bitcoin, or Bitcoin is in them, like however you want to see that?
Yeah, it's I mean, I think the 2024 election is a prime example. 2020, the Biden administration and the Democrats effectively tried to burn the industry to the ground. And the counter attack was 290 House seats that are positive towards Bitcoin and the crypto industry, probably 20 Senate seats. Sherrod Brown, the 20-year Democrat incumbent, chair of the Senate Banking Committee, gets unseated. Loses the Senate seat to a pro-Bitcoiner. And so we look at like all these major officials that like operated this Operation Choke Point 2.0, like they're all gone now because Bitcoiners like got politically active and the crypto industry got politically active and like booted them out. So the saying used to be, he who has the gold makes the rules. Because gold was the sound money of the planet with the highest stock to flow. But now Bitcoin's the sound money of the planet with the highest stock to flow. And increasingly, the Bitcoiners' influence is being felt in the political arena. And the Bitcoiners are helping like influence what the rules are. Which I think is fun. It's fun and it's exciting, Like we went from 6-figure magic internet money where nobody had any idea what this stuff was, to being persecuted. 2011, Chuck Schumer like puts it on the map by trying to go after Silk Road, to, getting your bank account shut down for over a decade. 2011, they start shutting everybody's bank accounts down that has anything to do with crypto. So we have to be kind of these financial refugees. Getting our bank accounts bombed out of nowhere by these bureaucrats using reputational risk, whatever that is, to just like engage in monetary repression. Now the president of the United States is a Bitcoiner. How the tides have turned.
It's actually that's kind of fascinating to talk about. You mentioned a lot of gold. Why is that gold comparison so intriguing for you? Like, is that the closest thing you can Bitcoin compare to?
Well, yeah. I mean, it's got a 55 stock to flow. It's the scarcest asset on the planet that has large liquidity. Yeah, I mean, you read Saifedean's book, The Bitcoin Standard. It helps one understand that that history of sound money and, why gold is important. Bitcoin's now, 2 trillion market cap, lots of liquidity, lots of durability and safety, this ossification stuff that we talked about. And so, it's like Bitcoin's coming onto the stage and it's competing with gold as this like store of value, this sovereign instrument. And so gold's been that sovereign instrument for a couple of thousand years at least. So it's, gold's probably like, man, what's this new Bitcoin thing doing around here? And I don't think gold's going to go away or anything. I mean, gold has properties that makes it very attractive for a lot of reasons. And it has huge amounts of network effects. So, gold's not going anywhere. And actually, gold's market cap has outperformed Bitcoin's market cap in 2025. So, go figure, right? I like gold. I've liked gold as a monetary tool or product to hire since Bitcoin even existed. Hence why I, had my Run to Gold website. So I think that, kind of to our point, I think that the more tools or instruments we have to claim monetary sovereignty with, the better. And gold's one of those. And it's not just one of them. It's a massive, powerful tool. Like, let's put it in perspective. 2 trillion market cap, 25 trillion market cap, $50 million of daily emission for Bitcoin, $510 million a day of daily emission of gold. Like, gold's daily emission is 10 times Bitcoin's. We don't even really have another proof of work coin that's like close to that, right? I mean, Dogecoin is probably the closest. Like, Dogecoin is to Bitcoin what Bitcoin is to gold is kind of, when we're looking at relative comparisons of economic size and mass. So, I mean, gold is a tremendous, massive tool that we can use to claim monetary sovereignty with. Now, it's not extensible. You can't send it over a communications channel like you can with Bitcoin. So Bitcoin does stuff that gold can't do and vice versa. So, I don't think it's going to go away. Just like Bitcoin's not going to go away. Yeah, and a lot of that gold monetary premium might transfer to Bitcoin over time, as it has over the last 15 years.
I like the aspect of more competition is good for the market. Saying like the more options we have for sovereign monetary tools, the better it most likely is for the individual. Like there's a basic market theory of like more competition is good.
Yeah, I mean it's free market, free market versus not. Which, like in my book, The Great Credit Contraction that I published the week that Bitcoin got launched in 2009. I talk about this principle of like a free market in money versus something like chartalism, where the state like just decrees something has value. So something either has value because we subjectively value it, or it has value because the state deems it so. Those are the two competing ideas, and so if we subscribe to the subjective value theory, that the individual is what is the one that's ascribing value to something, then that's, out of that grows kind of this whole branch of thinking, in game theory with regard to, monetary products and stuff like that. And so, yeah, if we want to have profit and loss helping inform decisions and capital allocation through entrepreneurs, a free market in money helps us get a much clearer signal from those entrepreneurs in that process. And so we waste less resources as a result. So societies who will do that will be more competitive than societies that don't, as we've seen over the last 150 years. So, if the United States is going down this path of monetary free marketism, and that's what we get out of the stablecoins and what we get out of kind of letting the crypto markets run free in terms of innovation and stuff, we will only get better like profit and loss signals coming from our entrepreneurs. And as a result, we will have better allocation of capital and we'll get better products and everything delivered at a lower cost. Because that's what capitalism and real true capitalism, not this crony capitalism of, the creature from Jekyll Island, but real true capitalism, that's what it delivers. And that's what it has delivered the last 250 years with America. We've had the freest markets on the planet with the greatest respect and dignity given to the individual. The Constitution, the Bill of Rights, and the rule of law. We haven't ever seen something like that in history, really. And out of that exploded onto the scene the most powerful country the world's ever seen. And under Trump, America's saying it's back. Like we kind of had this 40 years, 80 years since World War II of, this kind of New Deal, FDR era, judicial activist, Democrat takeover. But that seems to have been fended off pretty definitively, 60% in the Trump-Biden election. And so, like, America is kind of saying, hey, we're back, and we're back with a vengeance. We're going to make a ton of money. We're going to be the most powerful country on the world. We're going to take back our Panama Canal. We're going to, we're going to bomb your nuclear reactors. Like, we're going to take Greenland. America's acting like a superpower that it is. And it's unleashing it. It's unleashing its entrepreneurs, and it's, in the process. Like, you look at the tax code changes in the big, beautiful bill, 100% bonus depreciation, stuff like that, cutting back regulations. You look at like several of the memos that have come out of the deputy attorney general on at the DOJ regarding crypto and like crypto policy. And then you look at the executive orders and you read the digital asset report that came out of that executive order that just got released, I think last week. I mean, America is being very serious about, we want free markets, and we want this unleashing of the American entrepreneur. And what did we get the last time we did that? We got Henry Ford and Rockefeller and Vanderbilt, and we built the world is what we did last time. Like, America built the world, and railroads and steel and all that, the oil, all that type of stuff. And the big, barons of the 19th century. And I think America is getting ready to do it again.
Bitcoin is, if you talk in that sense of America, I think Bitcoin is in general a very American idea. Like, it only makes sense that, like, first when I saw America is now talking about adopting a Bitcoin strategic reserve, I was kind of wondering. I thought smaller countries are doing it first, and not the one that is actually in control of the fiat system. I was like, oh yeah, like, why are they doing this Bitcoin thing? But it makes a lot of sense. And I think we can see even like a Bretton Woods 2.0 with they have the Bitcoin and give the stablecoins to the world.
Yeah, I mean, Bitcoin. Yeah, America is not a place. America is an idea. It's an idea of freedom and the dignity of the individual, that we're endowed by our Creator with certain unalienable rights. So it's tracking back to the Magna Carta. It's tracking back to the Declaration of Independence. With that, we have natural law and John Locke and, the University of Salamanca, and then it went up into London and it came across to North America. That's idea. That idea of freedom, that's America. That idea. And that idea has now gone into cyberspace, right? With asymmetric encryption, the crypto wars of the 1990s, and now Satoshi, has discovered the digital scarcity spell. He was doing his research in there and discovered a new spell like digital scarcity, and Bitcoin's that first practical implementation of it. But that idea of America has gone in there, into that, because it's digital scarcity, it's property rights, and that property rights are like that's coming out of this whole social contract, this whole, thinking of this idea of America, this thinking of John Locke and Adam Smith, and the the Austrian School of Economics and the dignity of the individual and Constitution, that idea is now like it's impregnated right into Bitcoin itself as digital property rights. Because property rights are like absolutely key to our, to this individual philosophy of liberty. The property rights are the result of how we exercised our liberty in the past. The great writ of habeas corpus, out of the Magna Carta to challenge your illegal detention. That's how you preserve your liberty in the present, and your life interest is how you is your that liberty interest in the future. So it's life. That's why we can't just murder and kill. Slavery and involuntary servitude and illegal detention. That's a great writ of habeas corpus. And then it's property rights. And Bitcoin's here effectively saying we're going to have property rights that are determined by math and thermodynamics, not necessarily by rule of law.
Beautiful.
That's because you can now acquire protection at a much lower cost, right? Because like no amount of violence is going to solve that math problem. So when we're looking at how property rights were secured throughout history, thousands of years, they've always been very susceptible to violence. But now, we can acquire this force field of, exahashes and huge amounts of mining protection and math, right? That protects our property. It's not like we need a standing army to protect our railroad or our coal mine. 19th century America was protecting property rights, but those property rights were still very much needed to be protected with large projections of military force. But now, these property rights that we've got, like the Bitcoin network's protecting like $2 trillion of value, and it's doing it at 110 stock to flow. So it's the cheapest form of protection you can get, right?
It's such a great way to look at that. I love it. I have one question to ask each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Yeah. So when we look at sound money, we're dealing with something on the civil plane, and the civil plane, and when we're dealing with it on the civil plane, Emanuel Swedenborg, who helped fix the Swedish monetary system, he said that it has to do with the very highest things with which we are entrusted. So fixing the money, we can fix the world. And that's important. And we got to have good time preference on fixing that and everything. But I think the other parts of Swedenborg's writings are the most important ones. It's nice to fix the money, but the other stuff he writes and talks about is so much more valuable. And so I suppose that would be something you can learn from me is like, we look at the Austrian School of Economics, that's just the tip of the iceberg. Everything underneath it would be found in Swedenborg's writings when it comes to human action. And so, if people are not familiar with Swedenborg, they probably should get more familiar with his writings. They would sure understand game theory and a lot of these principles a lot better if they did. So that'd be one thing I'd say you could learn from me.
Awesome. Yeah. I haven't been aware of that. I have to look into this. I love it.
Yeah. I mean, he's one of the great monetary scientists, you have Isaac Newton help develop the gold standard. Copernicus wrote some treatises on interest. Goethe, wrote in Faust Part 2 about Mephistopheles and the negative effects on society that comes from debasing the currency. And Goethe was phenomenal. I think Goethe's, kind of to this point, like Goethe wrote a great book called Elective Affinities, which kind of delved into, he was thinking, I think, about human thermodynamics. But I think it's because he found Swedenborg's writing so intriguing that he was then trying to make sense of it. And he doesn't resolve it in elective affinities, and Goethe's, he had like 3 times the vocabulary of Shakespeare. Like Goethe's consistently in the highest IQs ever in human history. And yet he's baffled by Swedenborg, and Swedenborg in his own right is probably one of the top 5 IQs in human history. So, like reading and digesting and pondering about, from the premier minds throughout the ages, I think is something to learn from. And if we're going to go point at any specific ones to learn from, I think they were all interested in the money, and they devoted significant parts of their activity to that. Swedenborg had a 1722 paper basically on the inflation effects on the monetary system in Sweden and how to fix it and why it was so important. So, we're definitely involved in some very important things, fixing the money. But those important things only go up to the highest level on this plane, and there are other planes that are much more important. And Swedenborg gives us some initial glimpses into those other planes.
I love that perspective. Really cool. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, if you could ask Hal Finney a question, what would it be? And what do you think his answer would have been?
Well, that's a great question. So Swedenborg actually talks a little bit about how advanced technologies are created. So my question to Hal Finney would be, are you still helping us create these advanced technologies?
What do you think his answer would be?
Of course. As Swedenborg says, our love is our life. And I think Hal Finney loved monetary sovereignty.
Very true. Really cool. Thank you so much, Trace, for being on the podcast. Before I let you go, where can people find you and ask you some questions?
So I got my podcast over on bitcoin.kn, and from there you can find Twitter handles or all that stuff. I'm not too active lately, but there's stuff there, and hopefully we'll be getting more podcasts out and stuff like that.
Awesome. Was really cool chatting with you, and thank you so much for being on.
Yeah, thanks so much for having me, Robin. You dug up the fossil, and it talks back.
And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.